before we got to any suburbs was we applied some filters to first get down to the types of suburbs that we wanted. Firstly, we spoke last time, we want to really focus on equity growth. And given that this is one of your earlier assets, Niraj, didn't want to go super regional. We wanted to try remaining somewhat close to the CBD. So the first filter we've applied is less than or equal to 100 kilometers of any CBD in Australia. So that'll naturally rule out some regional towns, which we think is okay. We can bring them back into scope when we want those higher cash flow properties because there the yields are super strong. The second thing we've put in is stock on market less than or equal to 2%. So explaining what that is, in a suburb, if there's 100 houses available, 2 or fewer of them are up for sale at the moment. Usually in areas lots of new developments or something weird's going on and people are exiting the suburb, a very high percentage of the houses in the suburb would be up for sale. So this would filtered out, which will protect us from that risk. The third risk is inventory levels. So maybe explaining this a little bit more, like in a healthy market in Australia, there's probably 3 months of inventory live in the market at any one time. So that means say in Wetherill Park, for example, if tomorrow there was no new listings to come in at all, it would take 3 months to stop everything that's on realestate.com and Domain. If it takes more than 3 months, that means there's more, typically there's more supply in this market than there is demand. On the less than 2 months, 3 months, it goes a month or 2 months, there's way more demand. Things are just flying off the shelf super quickly.
Would be too expensive.
It could be that it's too expensive, or it could be that it's a rising hot market. When things are flying quickly, people are starting to bid against each other, and prices are also starting to move up with it as well. So you'll see, we want kind of a sweet spot where inventory levels are low, but not so low that we've missed the boat already. Then we've got sales days on market less than or equal to 60 days. We just don't want to be buying in smaller towns or smaller suburbs where it takes 90 days to sell a house. We want also the time to sell to be fairly tight. So this is the time between you putting your ad up on realestate.com and the house being sold. Yeah. Now, because we're adding so many filters on top of each other, you'll see that days on market in many of the suburbs are 20, not even close to 60, because they're all adding layers and layers of filters. So bear with me as to what the final result looks like. Then we've said we want median prices to be below 650,000, which kind of is around the discussion we had last week as to where maybe your pre-approval / full budget might end up at. We've put in the 10-year average annual growth rate. So this is the growth in the property price to be between 0 to 8%. Obviously, if a market hasn't grown in 10 years, it's a little bit concerning. It's most likely that it's a mining town or a single industry economy. And that industry has disappeared because in Australia, most areas do go up. So we don't want to obviously look at those. But at a similar kind of vein, many pockets of Brisbane are now sitting at 9, 10, 11% growth for the last 10 years, which means they've typically had their time in the sun. And we don't want to be buying those because then usually what happens after that much growth is go through a period of stagnation before growing again. Other things, so this one here is more around the tenancy market. So we've got vacancy rates less than 3%. So similarly, if say in a suburb, there are 100 rental properties, we want 3 or fewer of them sitting vacant today. So most of them will be occupied. Then we've got another filter here that says we want to see proof that this market has already started moving in the upside in the last 12 months. Because you might remember that chart we showed you a few weeks ago that growth happens in these big clumps in the cities. We don't want you guessing and buying before that growth has already started. We want to see some proof of it already. Similarly though, we don't want to just buy in a suburb where, prices are going up, but rents are going down or not really moving, because we need to get that rental yield up over the next 3 to 5 years. So we have a similar filter here where we also want to see the rent moving in the right direction. The 10th filter we've applied is all the other things are great, but we also want to see that more and more buyers are entering this suburb than 12 months ago. So the actual interest from people in the suburb is continuing to grow. And the last one that we have is we want an owner occupier rate of 60% or above. Typically, like, if you're buying in areas with 50% owner occupiers, like there's a lot of investor activity in the market. The problem with investor activities, investors are fickle. Like, we'll sell when we make good profits. We'll move in and out as needed. So that could impact or fluctuate the pricing in the market. When we see a larger percentage of owner occupiers, that typically means there's a reason for people to live there. It might be like the area is beautiful, or maybe it's close to the job or some other reason. And typically when there's more owner occupiers, they just take better care of the house, the whole suburb. There's like a better feel and stuff like that. So these are all the filters that we've applied. Any questions on this so far before we go into what's come out on the other end?
You've done a great job.
It's looked at brought together a lot of variables.
We've put a few together. It's always interesting, every month that we run this, the results are slightly different. Obviously, we have different budgets and clients with different things. But if we jump into what's actually come out, and don't stress so much about everything in this list, we will take you through which ones we like, and I'll explain to you exactly why. But broadly speaking, pockets of Western Australia, as this come up, pockets of Victoria are now emerging. And interestingly, some areas in South Australia and Queensland and Northern Territory we wouldn't invest in anyway. But one area in Queensland is coming up. Why I say this is interesting is if we ran the same data 12 months ago, a majority of this list would have been Queensland and Western Australia. It seems like Queensland's now dropping off, which is interesting to see, but similarly kind of what we think the growth there is slowing down massively. Now, we have the regions here as well. So in Perth, we can show you a few different pockets. So are you able to see this tab as well when I opened it now? Have you guys been to Perth?
Never.
Okay. Definitely. It's actually pretty fun. You should go. But we're not going to push this so much from an investment perspective, but I'll take you through what's coming up. So what's going on in Perth is there's a massive railroad extension from Thornley, Gosnells, Kelmscott, all the way down to Byford. And we saw some of the areas like Gosnells appear in your kind of short list. So what do you say in that? There's a train line upgrade, because previously there was all these areas down here. It was very hard to come to the city. It was taking a little bit over an hour, but with the train.
Pointer there? You've got a pointer or something?
Yeah, are you able to see?
Your mouse is very small.
Is it better now? So this area here, actually, let me see if I can draw on the screen I'm sharing. 1 second. Yeah, sorry, I don't have a pointer. What I might do is I'll click on this area and see if, okay, so this is one region. If I zoom out slowly, hopefully you can see the highlighting here. So this pocket was previously not well connected to the Perth CBD. It was only driving that was really available, and the rail was very limited. It used to come down to this pocket here, Thornley.
Right.
Quite nicely, but it wasn't very well servicing down further down, southeast. There's been massive infrastructure projects that are now running that are putting train lines down here that made this pocket quite attractive to us. Other than that, some other areas that have also appeared in the search, I'll just go back. So we've talked, Gosnells is what we just covered now. Maybe other parts we can look as Rockingham, which is actually a bit more south in this region here. So think of it more like your Wollongong equivalent to Sydney, although it's not quite the same amount of distance. It's a bit closer to Perth CBD, which is just here. Here it's it's more the lifestyle. A lot of people live here to be close to the water. In Perth, everyone has a car and everyone drives. So it's not quite Sydney where it's seen to be very important to be at the station if you're living away from the CBD itself. And many of the workers down south actually, come work in many of these ports down in Mandurah or other areas, so they don't actually have to travel up to Perth CBD per se to work. And then another pocket that showed up was Medbura itself, which is this pocket here. So some massive projects going on down here as well. But yeah, look, we won't be recommending these areas, and I'll show you why in the data in a moment as well. But I thought anyway, I'll show you on the map so you know where they are. Then we've got, so we've talked about Armadale. Then we move into Melbourne, and there's a few different pockets of Melbourne that seem to be quite appealing. So if I zoom out, I'll try to bring you into Melbourne. Oh, I zoomed into Canberra. It's not where I want to go. Presume you've been to Melbourne? Yeah, nice. Okay. But you probably haven't really ventured too far out of CBD. So you got Station up here. northwest, there is like a
the airport. Yeah.
sorry. Next to the airport, there's a massive intermodal project happening in this region here. And so we're seeing a lot of like investment activity now move into West Memphis, Jacana, Broadmeadows, Dallas, Colorado. So there's like an intermodal project coming. So there's like 250 million. And there's also airport extension, and there's also an airport train line now being put in to get to CBD. So there's a lot of investment in and around the airport region generally. But where we're kind of liking it is close to the airport, but not right there. Like Jacana, Broadmeadows, Dallas, a lot of the data is looking quite good, and there's huge amounts of buyer activity starting to now come in. And we'll take you through the data for those as well. So that's one pocket. So that's about like 25 kilometers north of Melbourne CBD. So fairly accessible, not crazy far. Then there's other pockets as well up here towards kind of like Deer Park and Albanvale, where there's quite a lot of activity also, or like the data pointing in the right direction. And finally, another pocket is down in Melton, but not so much the fringes of Melton, because the risk here is there's a lot of farmland being redeveloped, but in the core part of Melton. And the reason why this area is starting to now pick up is there's like $1 billion hospital project now kicking off here. And they've identified this as like the Parramatta equivalent, or like the next kind of pseudo CBD of Melbourne. So they're directing a lot of money here because they know there's available land in and around it. So if we move to this pocket, we probably want to be like in the CBD almost, rather than the fringes.
Do you know where they're building the hospital?
Yeah, it's like around here somewhere, right? Cobblebank, right, Nick? Do you remember the exact location? No, he's mute. It's around Cobblebank. I can give you the exact location after the call. I've actually got a property around here somewhere off Exworth Road as well.
Oh, in Melton area?
Yeah. So that's probably covering. And then there's like one area in Geelong, which is also doing quite well. Geelong is, I guess, the second CBD of like second kind of, not CBD, like second metro kind of area of Melbourne. It has its own airport, Avalon Airport, which is the one you don't want to accidentally go to when you're going to Melbourne. But there's quite a lot of infrastructure works happening in and around this region, which we'll show you shortly as well. That's all the Melbourne kind of regions that are pocketing coming up. Adelaide, there's a few areas. I'm not going to go into them because the data, like there's reasons why we won't go there. Similarly, I think you know where Mackay is. It's like up north, like south of town a little bit. North of Sunshine, and Darwin's there as well, but we won't go there because there's infrastructure projects coming in. So, and also we don't think the economy is diversified enough just yet. So now that we've kind of gone through the regions, I might just walk through the data, if that's okay. So you can see distance to CBD, many of these suburbs. I think like I want to draw your attention more to Melbourne. Like you can see a majority of these suburbs are, like what I find crazy is you can still buy within 50 kilometers of Melbourne CBD at 650k. It's unbelievable when the equivalent in Brisbane has almost been wiped out.
In Brisbane?
Yeah, Brisbane's like, even look at like Redcliffe now, you're looking at 850, like 800k as a fairly normal price. So it's quite interesting from a price perspective that we're still able to get so close to the city. Total sales listings, don't worry about this. Nick and I just look for, because we don't want to be recommending, for example, a suburb like, we don't want to say, hey guys, let's go to Stratton. But then actually there's only one sale listing available on market. We're not going to be able to buy anything for a long time. So we do that more as a check for ourselves. Percentage stock on market, you may remember we applied a filter of 2% or less. But because we've applied so many other filters on top of it, you can see in many of these locations, the stock on market actually is like less than 1%, or I guess there's one here above 1%. So in a majority of cases, there is very tight inventory in all of these markets, which means there's a lot of demand. Rental listing got as well there. I'm not going to go through that because we have the vacancy rate number a little bit later on, which is probably more relevant. Inventory levels, we talked about 0 to 3. 3 being a balanced market, anything above 3 being oversupply, and anything below 3 being quite anemic. So almost every market that we've put in here, barring maybe this one here, which was Albanvale, which is more like a balanced market, is very much pushing towards strong buyer activity. In terms of days on market, again, because we applied so many filters, even though we put it as 60, when they all accumulate, you can see nothing is near the 60 mark. The highest days on market is 44 in one of these areas. So all markets are selling very quickly. Why this days on market matters is, say, like, I'm just going to use this again as an example because we talked about it. Say we decided on Leader perhaps as a suburb, and we know that Lida now has an average days of market of 9 days. That means if we agree to go to this market, the same day that the listing appears, we will have a call with you and decide if we like it or not. The next day, we'll need to ask for a video walkthrough, contract of sale, get all of our due diligence questions over to them. And probably the day after, we need to put an offer, because that's how quickly these houses are being sold. Versus, like, let's say we pick a pocket in Melbourne and it's 33 days, we have more time to breathe. If a property comes online, we can take our time, get the agent to go to the open on the weekend, like get some checks done, etc. So we've got it in there. Median price, of course, we put in below 650, which all of these are. We might be buying something like a better house in the suburbs, so we might still be pushing closer to the 650 mark, even if the median might not be there. Median rent is good, but you can see rental yield, and this is kind of the sticking point where the beauty of Western Australia is the rental yield is very, very strong, even at a median level. So, for example, if the median rental yield of this suburb here, which is Pinjarra in Mandurah, is 5.11%, that means realistically we can find houses at 5.55 even. So the rental yield is pretty amazing. The downside of some of the Melbourne pockets that we'll be looking at is the rental yield very quickly goes into like the 4s or high 3s. But we'll get to why we still like it in a moment. Then we've got the 10-year average growth. Not a lot of theme here because we've already applied the filter, so everything kind of nicely conforms. Vacancy rates as well. Everything is kind of within that 3% mark, so nothing to be super alarmed about. The only thing to be wary of is, in some of these areas where it's a little bit over 2, be prepared that it might take 2 or 3 weeks to find a tenant. Whereas like when it's 0.39, you'll get a tenant in 3 days. So that's probably the only thing, but we can advise you on a property by property level. Now, this part's super interesting. So we subscribe to also an external software that does forward-looking projections on each suburb in Australia. And it's not perfect, but we obviously sense check it as well. It gives you an idea based on each region. Is this region or suburb growing? So are prices growing at a higher rate month on month, or are they starting to grow at a lower rate month on month, or maybe they're at that. And this is why we're not super keen on Western Australia, because a majority of it is either at the peak or decreasing. Now, decreasing doesn't mean it's not growing. It might mean last year it grew 20%, this year it'll grow 10%. The rate of change is reducing. And you can see that to this right-hand column here as well, right? Many of these pockets have grown 20% in the last 12 months, which is phenomenal in the property market. And then over a 3-year period, some have almost doubled, and many have hit that 70, 80, 90% growth in 3-year period. So the reason we're not super excited about Western Australia is we don't believe that can happen again. It's already grown so much. It's probably, maybe it'll grow up another 30 or 40%, but we want to get that 70, 80% growth, and we don't see that happening again. Now, interestingly, if we start coming down to pockets of Melbourne, you can see a majority of it is starting to increase. The last 12-month growth has been very poor, it's been there or thereabouts, but the rate of change is starting to increase quite quickly. And even over the last 3 years, it's barely grown. So this means we're very much buying at the start of that growth cycle, not later on in it. And then if we come to Adelaide and so these 3 were Adelaide, they're all decreasing. This one was Mackay, already at its peak. Now Northern Territory is increasing, but I think it's just maybe it's an area where we consider when we already have 5 or 6 properties, probably not a good second property to invest in. In summary, what we want to see is increasing. We want to be buying into a market where the growth is accelerating, not decelerating. So we've got here the 12 and 36 month median rental change, price change. And then here we've also got the median rental change. By the way, I'm going to share you the spreadsheet, so you don't need to take notes or anything. You'll have all this data yourself. So here, all we want to do is make sure across all suburbs in the spreadsheet, rent is growing. And honestly, the great news is they're all growing very well. Some double digits, some lower. I think the worst one was 2%, which was St. Albans Park, but that's in the Geelong region as well, which we probably won't focus on for you because you've got the budget to buy a bit more close to CBD. So that's median rent. You can also see over a 3-year period, you're looking at an average of a 30% rental growth. Obviously, some of the pockets of Western Australia that have already finished that growth journey have had much stronger growth in rent. Other pockets are closer to 30%. But in any case, if we can buy a house where the rent is 4% yield. Within 3 years, it can get to 5.2% if it just grows at that 30%. So it's not a bad result. Then we've got days on market changing. So this is super interesting because about a year ago, all of these were negative for Western Australia. And this is saying like, how do I say? Okay, let's put this example. 12 months ago, a house goes up for sale in Parramatta. Maybe it was taking 100 days to sell a year ago. If it's gone down 50%, it means now it's taking 50 days. Well, in this instance, in the topmost line, it's gone up 67%. So now it's gone from 100 days to 167. What we were seeing in Western Australia last year is massive negatives across everything in the last 12 months. But now it's all turned positive, which means suddenly it's now taking longer in Western Australia to sell a house, which again confirms the theory that the market is actually decelerating, not accelerating. And if we kind of come down also, you can see many of the Melbourne ones are now starting to decelerate quite quickly, barring one with weird results here, which we can check up later. And then, yeah, like you can kind of see some are decelerating, some are accelerating. Over a 36-month period, it's different again. Over 3 years, Perth has definitely had a massive compression in time to sell. But over that 3-year period, Melbourne is actually like, it's gone much, much worse. It's taken way longer to sell a house because over the last 5-6 years, Melbourne has performed terribly. But you can see that it's starting to now change. The final bit is owner-occupier percentage, which we've got here. Honestly, there's not much to cover because we've applied the filter. I've also listed out all of the key infrastructure projects across each of the key regions that we've put here. So many have infrastructure projects. So Perth had a phenomenal amount of money being pumped into it, which is part of the reason we had such a boom. Also helped that commodity and mining prices stayed pretty strong over the last few years. So lots of lithium battery projects, desalination, etc. When we come down to Melbourne, there's like more, runway, new hospitals. There are some lithium projects. It's more like health and infrastructure because it's a big city. And then when you come down to Mackay, there was a hospital-based expansion, but nothing in Northern Territory was being built, so we're not super excited on it. There's nothing that's going to make it more exciting for someone to go live there. Then we've got suburb population, which you can look at. We kind of use it more, but probably what we care more about is rent as percentage of income. So we want this to be, in most cases, below 45%. To signify that there isn't too much rental stress. And you can see like when we come into many pockets of Melbourne, it's significantly lower than that. That gives us confidence that there is still room for us to raise rents within Melbourne without leading to, I guess, lots of problems in terms of repayment. Whereas in Perth, you can see it's now creeping up quite high. Perth properties rent very expensive. Like many of these suburbs are going for 700, 750, 800 even. Whereas Melbourne, like some of these pockets are still going for 480, 500. So there's a massive discrepancy. The final bits here is population forecast. The reason we have it here is simply like we just don't want to invest in an area where the population is growing down. We actually see strong population growth, which we tend to see across most of these areas. The reason this is important is like this is ABS data, and the governments typically use this to project out where they want to move their spending in terms of infrastructure resourcing as well in the future. But having had a look at it, and maybe if I were to provide a summary, we think Perth as a region, the time has passed. Like it's had its time in the sun. If we were back 2 years ago, we'd still be very much pushing you to go to Perth. We don't think you're going to get that equity growth that we're looking for this first investment. If we were looking for a cash flow investment, we might look at Perth and buy like a dual occupancy or something, because you can get yields of 6, 7, even more %. So
Dual occupancy mean?
Like a house where you have like 2 doors and like one is a 2-bedroom, another is a 3-bedroom. So you can actually have 2 tenants paying you rent. And in Perth, you can get pretty good rent as well. Like one could be paying you 500, another like 350, 400. So you could get like 900,000 bucks a week rent from a pretty nice house. So we're not very excited about Perth anymore, but if that's something that is super exciting to you, we can open it up. Melbourne to us is kind of like Perth where it was 3, 4, 5 years ago. Now as a market, Melbourne has never been a strong rental yield as Perth or Brisbane or anything like that. Rental yield has always been like a bit of the thing that draws back the Melbourne market. But given that like you're in such a strong income position and you can actually afford to like leverage some of the tax benefits from the loss, it's not a bad thing for you. And from an equity growth perspective, We have no doubt it's going to be pretty spectacular over the next 3 to 5 years. Adelaide, similar to Perth, it's grown around the same time, maybe even like a year earlier than Perth. So we see most of Adelaide has dropped off. Mackay, just not as exciting as Melbourne. It's already at its peak, and Darwin, we just don't like that there's no infrastructure projects and not enough diversification of income. But yeah, I'm keen to get your thoughts. I guess our recommendation is probably focus within the corridors of Melbourne for the first purchase. And we can get pretty specific about where we like within the Melbourne region as well. But yeah, I want to open up the conversation to get your questions as well.
Those Melbourne places, what's the percentage rental yield approximately?
So we've gone from rows 41 to 46. So I'm just going to...
From about high threes to
Yeah, I would budget just high threes. It'd be conservative, and if we get something better, it's good.
Okay. And that's within the range you had previously said is a good amount to have as a rental yield.
Yeah. So at this range, at a 650K purchase price, it'll cost you about $2,000 a month to hold after all costs like councils, land tax.
$2,000 out of pocket per month, you reckon?
And then you'll get your tax refund of 40% or whatever it is.
Yeah. Okay. So that would be negative gearing.
Correct. So you we'll give you an exact number, like we do the proper projection at a property level, but as a guesstimate, it will cost you about $2,000 a month. And then after tax, it'll probably cost you like $1,100 because you'll get like 800 and something bucks back in tax. But that happens only after you submit your return, whereas on a month-to-month basis, you need to actually have that $2,000 to make the payment.
Mum, what do you guys think?
Is that including the interest?
Correct. Yes. So it's including interest, property management, water rates, council rates, land tax. We've put insurance, and then we've also usually put a $2,000 or $3,000 catch-all, other, like in case a dishwasher breaks or something like that.
That's better.
Yeah. So it's your true cost, like actually what you'll pay, not like
But what about you said the dual occupancy? How does it perform? Like I always would like dual occupancy because
more rent. What we're seeing in Perth is those properties are not growing to the same rate in capital growth, but the income is exceptional. But I think we might even be able to find a good balance for nearage here, where we buy a property in Melbourne where maybe the rental yield's only 3.8 or 3.9%, but there's the potential to add a granny flat, which if we do add, will bring the whole yield back up to like 5.5. So we can consider something like that to offset the terrible base yield, and that way we get the benefit of the growth in Melbourne while still having like an opportunity to put that granny up.
Yeah.
Do you know of good agents and all that around there for managing the properties?
So we've between Nick and I, we've got a few properties in Melbourne personally, but we've also been buying for clients there as well. So we've got maybe 3 to 4 property managers that we work with. But what we do in a typical process is, like, if we buy in a suburb, there's a property manager who's known to be the expert of that area. We'll get their quotes as well, and if they're cheaper than who we use, we'll try to use them instead. There is some like local specialized knowledge as well that typically helps. But yeah, we've got a pretty good coverage of Melbourne.
I think that sounds good. Buying in Melbourne. What do you guys think?
Yeah.
Yeah, I think that's quite reasonable, because Perth was a little bit labile previously. At one time, it had huge booms, and then it fell flat. So it's got the cyclical thing has been very because of the mining and all that industries. So at one time, rents were super high, and then there were huge vacancies. So this is just subjective from my reading and all that. So not backed by all these figures as well, but it's more labor. So Melbourne may be a little bit slow growing and all that, but maybe more stable as well.
Yeah. And the way we also see it is, it's actually crazy. Melbourne is the second, Victoria, I think, is already now the biggest or most populous state. Melbourne is attracting the most net immigration. Yet the average house in Melbourne is barely almost the same as a house in Adelaide, and lower than the house in Brisbane. It's significantly lower than the house in Sydney, whereas typically the pride grows. What typically happens is they all move in, if Sydney's 100%, Melbourne's say usually like 85% of the Sydney price, and Brisbane's 80%, and blah blah blah. But because each market grows at different times, it doesn't hold the historical average all the time, like there's deviations all the time. So we've now seen like a significant deviation where the Melbourne property prices steadied out, but other markets have still moved ahead. So we see there being like a good catch-up opportunity. Like I wouldn't be surprised if the Melbourne market is up like 30 to 50% in the next 3 years, and continuing to grow further after.
A lot of Indian migration there as well. So I don't know how the areas you are looking at, are they the high Indian growth areas or not? A bit like in Sydney, you got Rouseville.
Yeah, and I can tell you.
Equivalent areas in Melbourne. So
yeah, like Melton region has a lot of Indians moving in. There's new temples popping up. There's like a big Punjabi store that's come up there as well. And this has become like, I don't know how to say, like, is that like Parramatta 20 years ago or maybe Blacktown 10 years ago? It's the cheap, affordable spot where migrants can go and very easily buy a house and live in. But it's far away from the CBD, but there's a big community of Indians. Also, I can show you on the map, actually, that might be easier. So, yeah, this Melton region has lots of Indians. And then also, like, Point Cook has almost become like the Castle Hill of India, like, of Sydney in Melbourne. So the more premium houses closer to the water, again, like a good Indian influence there. And then Werribee and stuff also has lots of Indians. So pockets of the West do have Indians. Pockets of the East do as well, but they're more around the Dandenong, Noble Park regions. They're already fully developed. There isn't a huge amount of infrastructure investment going on just here yet. So we're not as excited by that at the moment.
So just would that be an advantage or disadvantage for our purposes if from the point of view of Indians, because Indians would tend to want to just buy it, so rental wise might actually be more difficult. Is that true?
I think the way we see it is like it is a good thing, because many of these suburbs that we're buying in, candidly, like you or I might not want to live there. They're typically like socioeconomically, they're okay, they're not great. But when we see a flood of highly educated migrants moving in, buying in the suburb, it like the whole area tends to lift. Yeah, the whole profile lifts and it gets gentrified quite quickly. So we do think it's pretty good. And I think Melbourne's a little bit different to Sydney, where because the rental yield, or like rather the rent is so low, the renting population is still there. Like in Melton, you can rent a house still for $400 a week, like a 3-bedroom house with a backyard and everything. In Sydney, like don't even know if you'd get a studio in Blacktown for that rate. So from an affordability perspective, it's still there. Like even like I have colleagues who live in the CBD of Melbourne renting at $460, $470 for a 1-bedroom apartment. So it's a very different market to Sydney.
And these areas that you pointed out, most of the houses, do they seem to be in that mid-range of not brand new, but just been around for about 4 or 5 years, so all the teething problems have been sorted out?
Yeah, a majority of Melbourne is actually older houses. So houses in the 1970s, 80s, 90s. So like, let me give you an example of a few of them. So maybe we'll just go into, let's just go Broadmeadows, for example.
With Melton, you don't feel like it's too far away from Melbourne, or it's sort of like it's its own city, so it doesn't need to be that close?
It's kind of its own little region. It doesn't like part of the reason why it's so cheap is that it's a bit further away. So what we like about it is more that the government's decided that they're going to create like a growth corridor there. So they're putting the money in the hospital, they're putting more money into that region generally. But given that you have a budget up to $650, like we would obviously explore further down as well.